Hey YouTube channel, and welcome to another video of the Kevin Strong Show. And in this video, we're going to talk about the mortgage credit crisis. I don't give a hell about credit, whatever you want to call it. Joe Biden has came out and basically said, if you don't have good credit and you have a lower down payment, you're all good in the hood. And those people who have good credit, hey, we're going to penalize you. So I typically stay away from politics, but this one I could just not pass up. Yes, I had to dress up for this one. This is my BM look. And that does not mean blackmail. That is black mafia because it is business today. So this video is not personal. It is business. So we're going to jump into this topic. A lot of people have been talking about it on the internet. We're going to dive into it. I'm going to show you some graphs and actually prove that even though the so-called intention of this bill or whatever thing you want to call it to basically help the less advantaged, it really is not targeting them at all. So stay tuned to the end of this video for that. So without further ado, I'm going to cue up this presentation. Once again, if you're new to my channel, before I get started, please smash that like button, subscribe, comment, and share because I care. So let me go ahead and tee this thing up here. Let's see here. There we go. Okay, so I'm calling this, guys, communism credit. So you just cannot get enough of this stuff. This is just asset 9, asset 10, asset 11, asset 12. So once again, this guy has decided to penalize those who have good credit and are in a position to put more money down and give an incentive to those who do not have good credit or not less credit as those, and basically those with minimum down payment. So let's go ahead and jump into this because I've kind of talked about this ad nauseum. So as I teed off, the Biden administration rule forcing good credit home buyers to subsidize loans to higher risk borrowers is set to go into effect May 1st of this year. PMI, which is a personal mortgage insurance, the fee that FHA, and that's not FHA in terms of Federal Housing Administration, charges, it's intended to punish those with lower credit scores and riskier loans to basically level the playing field from a risk perspective. So basically, an FHA mortgage is typically someone who has either marginal credit and has less down. You can do a FHA mortgage with a 580 FICO score. If you have 10% down, some lenders, not in today's environments, but in a normal environment, you can have a credit score as low as 500, put 10% down, and FHA will approve that mortgage. Okay, experts believe that borrowers with a credit score of above 680 would pay about $40 a month on a $400,000 mortgage under this current rule that's going to go into effect May 1st. If you have a high credit score and 680 is a good credit, you'll probably pay more. Okay, and that could be as around $100 a month, depending on the size of the loan. There's nothing in this rule that says it applies to first-time home buyers. Understand that. No one's talking about that. It applies to anybody borrowing money that is insured by FHA. So that does include refinances. This thing is just madness. All right, let's jump to the next one. Affordable housing failure by the government. This is my take on it. The Federal Housing Finance Administration, FHFA, which oversees federally backed home mortgage companies, Fannie Mae and Freddie Mac, have long sought to give consumers more affordable housing options. That has been the impetus behind all of this in terms of having a low credit score, still being able to get a home. All of this was predicated on basically making housing affordable to all. Under the new rules, consumers with lower credit ratings and less money for a down payment would qualify for a better mortgage rate than otherwise would have. Let me slow down a little bit. Okay, so here's a chart. I don't know if you guys can see this. This is a racial home ownership gap over time. So this is where I'm going with this. This is why I told you your homeboy had to dress up for this one, you know. Anyway, follow this. So basically, as you can see here, the yellow line is others. The orange line is yours truly, African Americans, whatever you choose to be called. And you can see it's kind of plateaued or it's been kind of consolidating ever since about 1994. Considerably, the top blue line is a demographic of the Caucasian population, aka white folks. So as you can see here, the home ownership rate is much higher when you compare whites to blacks. is much higher when you compare blacks to Hispanics. And then you got this other group that's in between. So by looking at this chart on the surface, it seems like, well, this is a good bill, because this clearly, we need some type of government intervention, right, to make sure that the minority population in the United States have a better opportunity for home ownership. And one way to do that is to lower the costs or make exceptions for lending guidelines, so people who are historically have been disadvantaged towards home ownership have a better shot at the American dream. On the surface, that's what this chart is screaming. So keep this in mind, because I'm going to debunk this by the end of this video. Okay, now we've got racial home ownership gaps over the life cycle. Okay, so this is broken down based on age groups. As you can see here, 35, then 35 to 54, and then 55 and over. So let's start with under 35. So obviously the blue represents the white. The orange color is the black. Hispanics are in the gray, and the other category is in yellow. So as you can see here, as the population gets older, the gaps come a little bit closer, clearly throughout under 35, all the way over to 55 and over. Clearly, whites have a greater percentage of home ownership than blacks, Hispanics, and what's considered others. As you can see, though, as you go from under 35 to the next bracket to the last bracket, you see a substantial increase in home ownership among Black Americans, right? You see that might be around 12%, and then that 35 to 54 range, it looks like it's almost at 50%, and then it bumps up about another 5% at 55 and older. And as you can see, it gradually increases for the Hispanic population as well. So once again, this chart may scream out as, well, wait a minute, this is why we need some intervention to bridge that gap. We need to have lower credit scores, better exceptions, so people who are considered minorities have a better opportunity at home ownership. Once again, even this graph speaks to that. But like I said earlier, I'm going to debunk all of this. So stay tuned. Okay, here we go. Reasons for the gaps in home ownership. Average median household income for whites is $78,000. The average median household income for blacks in aggregate across the country is $47,000. So there's definitely an income disparity, right? FHA, as I said earlier, will do a loan if you have a 580 credit score, and if you put 10% down, they will do it as low as a 500 credit score. But here's the rub. When someone is evaluating credit from a, let's just say from a non-secured type of credit, like a credit card, your income really doesn't pay that much into it. When I say pay much into it, it's not a factor in determining credit. It's basically based on your payment history. Do you have any lates? The composition of your credit profile. You can have an 850 FICO score, perfect credit score, and not make $40,000 a year. So contrary to popular belief, your credit score is not necessarily indicative of your income. A lot of times it is, but it's not required to have good credit. You don't need a really, really good income to have good credit. So I went a little bit deeper because everybody is talking about this thing that Biden has done. It basically makes it almost communism. And I said, well, let me see what the average credit scores are for these people who you're supposed to be helping. Here's the part in the video where I debunk everything. Buckle up, buttercup. So as you can see here in 2019, so this is a couple years old, but these numbers don't fluctuate too much. The average score, FICO score for blacks in aggregate across the United States is 677. Hispanics is 701. You see it. Whites 734. Asians at 745. Even a 677 FICO score is a good credit score. That's not subprime mortgages or junk or anything like that. That's somebody who's responsible with their money. They're basically making their payments on time. And your FICO score, in essence, is basically a snapshot of your payment history within the last 24 months. Just to give you the Reader's Digest version on that. The last 24 months is basically 90 to 95% of the algorithms that they make up in order to determine your FICO score. So a 677 FICO score is very, very respectable. Keep that in mind, because remember, all of this communism credit that was passed is supposed to help those who need it the most. And I'm sure part of this was politically motivated to rattle up and reaffirm his base. And it's not really going to help those folks because, as I've just explained to you guys, most people that are considered minorities, specifically in this graph or this slide, Blacks and Hispanics, have 677 and 701 respectively credit scores. But it's going to get even better. So here we go. The rest apply to past due. Okay, so let me explain what this is. The first column basically deals with the percentage of credit scores that apply to FHA loans. And then the rest of the columns you can ignore because that deals with past due or delinquencies. So let me break this down. Remember, this bill was passed to help those basically minorities. Let's just call it what it is. Hell, I can say it. You may not be able to say it, but I can say it. So anyway, back to our regular scheduled programming. So look at this, folks. Look from the FICO scores on the left. Loans with credit scores from 620 to 659. Okay, 34% of the FHA loans are given to people with that FICO score, and then from 680 to 719. 39% of the FHA mortgages are given to people with that credit score range. So I go back earlier to my previous slide where I said the average FICO score for Blacks in America was 677. So let's just say almost 680. I'm sorry, did I just say that wrong? Oh, 660. I'm sorry. I don't have my glasses on. Let me back up. 620 to 659, and then 660 to 719, and then the bottom one is 720 to 850. So the Blacks and the Hispanics fall into that 660 to 719 range, right? Remember the previous slide. 40% of the FHA mortgages are given to folks with those scores. So for the people who need the help, right? Let's say the 580 credit scores to 619, as you can see where that's at. Hell, that only represents 8.75% of the FHA mortgages. So what the hell is this intended for? The majority of people at 620 and above, if you take that category, the last three from 620 up to 720, you've got respectfully 34%, 39%, and 15%. So for easy math, let's say 40, that's like 80, almost 85% of the mortgages are given to people who have a credit score of 620 and above. But yet and still, they want you to believe that this is really intended to help those who really need it the most. This data is very up to date. I got this data, I think it's not even 60 days old. So this is very, very, very accurate information. You just cannot make this stuff up. But some people look at the narrative and say, oh my God, he's doing such great work for us. And that is definitely not the case. And as you can see here, without sounding like a broken record, clearly, who is this going to help? Right? The 580s on down, that represents what? Maybe 10% of the loans that FHA are giving out based on that credit score. That's who it's going to help? Nope. This is just political. All right, typical American mindset. So I just wanted to finish up with this. I found this to be very interesting in terms of so many people are being complacent, and all of us need to wake up and make sure that we're maximizing our potential. Make sure you're doing everything that you can do for yourself and your significant other. So as you can see at the top of this graph, at the height of that red point, is where everybody's risk conscious. Like when you're driving and you're walking, you're consciously aware. And over a period of time, you move into the next phase, which is called no longer preoccupied with risk. So mind starts to wander. You just, there's no big deal. You start taking things for granted, right? Like your paycheck, like living paycheck to paycheck, or thinking Social Security is going to be around forever, or thinking that you're guaranteed to have a pension because somebody told you that you're guaranteed a pension, right? You just make assumptions that have catastrophic consequences if you don't stay in front of those issues. And last but not least, no longer thinking about risk unless external stimulus, no internal stimulus or fear. You just basically said, oh, hell, the only thing I want to do is have Martha and my chew, have a goddamn beer and have my chew. I mean, you could not make this shit up. So I think that's the majority of people's mindset when it comes to their health, their finances, everybody wants to work remotely. Hey, if that works for you, God bless you. But I'm telling you, I think a 100-year storm is going to hit this country like we've seen no other. And those people who have those traditional work ethics that wants to grind, want to embrace the grind, understand delayed gratification, are going to be able to navigate through treacherous waters, be able to basically withstand this storm that's coming, and be a better person on the other half. But for those of you who are complacent or basically saying, I'm entitled, that entitled mentality, I don't think that's going to serve you well in the long run. So hopefully you guys got a lot out of this video. Hope you enjoyed this video. Once again, if you have not subscribed to my channel, I humbly ask for your hand on the like button. Subscribe, comment, and share because I care. This was the Kevin Strong Show, and I'll see you guys in the next video.